tell you what, Friday I was salivating. I'm telling you what, knew that we had that non-farm payroll report, had some chatter coming out that the China deal looks really, really good. They might be resolving that very soon, making an announcement. Everything seemed to, be looking towards, higher highs, breakout, and we got killed. Everybody got killed. We, meaning collectively, um, trying to get through this breakout. That the markets just, do you see the wicks? Just like a wick festival. Every time you would get long, it would bat you back down. Get long, bat you back down. Just incredible. Wick, 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 wick fest. And that means you try to get a position and you just end up um, eating it or losing on the trade. It wasn't until, as usual, very late in the session that we did close on the high. And you just need to ask yourself, what happened? We had the great non-farm payroll numbers and the indicators were all green, 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 green all day. And every time, I was saying green, 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 we would start taking off, but then it would come back on us like bopping our heads. So let's boil it down to the other time frames and take a look. The 60-minute impulse ended April 3rd, and we're in a counter trend on the 60-minute chart back to the trend filter. So we're on a 60-minute counter trend, but it has not started rolling over. The curve, the slope is still moving higher. So sometimes those counter trends, you'll stay with the slope, and if it does not start curling, you stay with the slope because it could just keep moving up. Sometimes, the market will address it like a counter trend, but the underlying factors are so strong that you get that, other impulse push up, obviating it. But so far we're still underneath the LR1 on the 60 minutes, so that had a little bit to do with it, but not so much on the higher time frame. These markets are correlated, and as Ben in my trade room pointed out, the bonds were running in confluence with the equities, which is not usual at all. These needed to be red when these equities are green, and it was all green. Everything was green, 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 including the YM. The YM's the one that kind of came off at the end of the day, but just a little bit. But everything really was green, green, green across the board, and that's very unusual. But Gary in the trade room is the one that really helped me understand this. I kept saying, all of my indicators, all of my templates were green, and I'll show you the Bloodhound template in just a second. But here is the reason for the inability to get through the market, and it is because of this little supply sitting right there on the ES, and we just broke into that box right there. So it was, do you see that? And if you're wondering why that little tiny supply, do you see this great big giant bar? That's a lot of heat coming down in the E-mini market. So the supply is sitting on top of it, that big bear bar. So that's why it's all those orders. So there's a ton of orders sitting right there and on top of it. So it's going to be like Pac-Man trying to eat through those orders before it can pop through. And so that's what happens. If you put this down on a 5-minute chart, you'll see that they had their heads banged in just like we did. Every time it tried to punch up, it kept getting thrown back down. And the same thing on, let me put it on a 3-minute, it's easier to see all that, wick, 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 wick. They had their heads handed to them on a plate just like we did in the NQ until the very end of the day. And they were able to break into that area. So just understanding supply demand. Thank you, Gary, so very much um, for pointing that out. It's got to be very careful understanding where we are on these higher time frames. And that's why I have my market analyzer coded for the trend for higher time frame, linear regression, and momentum higher time frame. But I don't have volume at specific spots. And that's just a matter of chart review. And that's something that we should pay attention to. And obviously, once I saw it, he kept saying it's supply on the ES. And so I pulled up the daily chart, saw it immediately, and was like, thank you so much. So now we know why we were in such pain on Friday. And it's just a matter of getting these markets to eat through that daily supply, and then they can break out. So whether they break out first attempt or if it comes back down, it could start curling over. And what usually happens is this will start curling over and this comes up. And so here's your range, and you won't resolve anything until you get above that or below that. So we're just in a counter trend, 60-minute counter trend. Okay. So, but sometimes if it's really, really strong and this breaks out and keeps going, it'll come back and then bounce up, and it won't come back to the trend filter. It'll just keep going up and channel, and then you just have this big channel going on, right? So we'll just have to see what happens if it starts curving or channeling up. Too soon to tell. But we did have a Goldilocks moment on that report, and we have China coming up in the very near future. My guess on the timing for that is that they would probably take the opportunity to get all their T's crossed and their I's dotted. There's no rush until that G20 meeting in June. And that would be my best guess, that they would do the signing of that extremely important agreement, the trade agreement in June at the G20. So that'll keep us going through early summer, at least, with the markets, and maybe give the markets a little bit of time to catch up, do a little bit more protracted ranges, and then explode out at the signing of that agreement. It's going to be historical, and I think it will propel all markets. So we would have so many more opportunities, trading global markets. Certainly China markets would be opened up. And then you would have to look at all China trading partners, Brazil, whoever, Europe, it's just going to be fantastic. So, but trying to figure out the 3-minute charts on a Friday morning is in my domain, and that is because of that daily supply. You can't fight the daily supply. Let me show you the Bloodhound template real quick so you'll see what we were looking at. We had this on the trend. The trend solver. This will pop up in just a second. There it is, the trend. And so I had all my good signals, right? But every time we got a signal and went for it, we got our heads knocked off, right? So you just have to be aware of those daily supplies and be careful, knowing what you're facing against. And this, unfortunately, was just sideways market action until that supply got resolved, and I would sit on my hands. In fact, I won't even be looking for any more longs. I'll be looking to trade that 60-minute counter trend. There it is. So I'll be looking to wait for that 60-minute counter trend and take a trade on the 15 or 60-minute until we either get above that. And so see, there were no signals at all. So if I had been trading that counter trend, I would have had no signals at all to trade Friday, and I would have been fine. So I should have been using my template, and I would have been fine. Isn't that funny? It's hysterical. Okay. All right, guys. Y'all have a great weekend. We'll see you next week in the trade room. Well, that's sort of embarrassing, isn't it? But it would have saved me a lot of headaches. All right. Talk to you later.